Good morning, everyone, and thank you so much for your time today. So I am Emer Healy, Business Development Director at Kantar, and at Kantar we focus on take-home grocery. So today's presentation is focused solely on the Republic of Ireland, but we do have a Northern Ireland panel also. So over the next kind of 15 to 20 minutes, I'm going to be taking you through some shopper choices that are making a difference. So this is what I'm going to be focusing on today. So I have split this morning's presentation into three sections. So we are going to have a look. I suppose the last couple of years have been very turbulent, not only for consumers, but also retailers. We had the pandemic, and then out of the pandemic, we came into a cost of living crisis. So over the last year, we have seen a little bit more stability in the market. And then from that, there has been changes in consumer behaviour that we're going to be focusing on. And then lastly, we are going to be taking a look at how the retailers are performing. So to kick off, I am going to focus on inflation. I suppose we've spoken at length the last couple of years, but on this chart here, we have just looked at inflation over the last 4 years. And you can see there up the top from 2012 through to 2024 our inflation rates. So the bottom chart, we have our market growth there in the orange and inflation in the red. And you can see as inflation grows, market growth does dip. It is worth noting that back in 2022 and 2023, we did see those kind of unprecedented rates of inflation. And 2023 brought about the highest inflation rate that we had ever recorded at that 12.5%. So at the moment, there is some good news for consumers that inflation is finally dropping below that 4%. And we have seen that it's a level that shoppers are a little bit more happy to absorb. And to go into this in a little bit more detail, so here we have the shopper response to inflation and then the impact of each choice on total spend. So the red line there is inflation, and then in blue we are looking at the volume per buyer that is picked up, and then purple store choice, and then orange our product and our promotion. So here we can see that this lowering level of inflation has actually resulted in shoppers being more likely to either trade up, so a really good story for brands, but also to pick up more volume per trip. And at Kantar, we do surveys with our panelists, so our panel voice. And here we conducted a survey on financial pressures and cohorting shoppers into three financial groups. So those that felt that they were struggling, so these are shoppers that felt that they just couldn't make ends meet. Those that were managing on a whole, so overall very comfortable, and then are comfortable. So these were shoppers that stated that they didn't really need to reduce any spend, and that they were very comfortable in most things. So I think the big standout here is we conducted the survey in October of 2023. I can see there on the left-hand side, the struggling shoppers were quite high at 32% of Irish households feeling that they were struggling. We did it again in February of last year, and then August of 2024. And you can see the struggling most significantly has dropped from that 32% of Irish households down to 25%. But I suppose it is important to note that shoppers' mindsets are settling rather than rebounding over the last year. We also asked our panelists who expected to see their households' finances to improve, and only 15% of total households actually expected their finances to improve over the next 12 months. On the right-hand side there, you can see we asked them how optimistic for the future they were, and we broke this down into short-term and then long-term, and then again across the different cohorts. And I suppose that great divide is still very present. Some are ready to emerge from the tough times, but others are still definitely trying to find that light at the end of the tunnel. And we've spoken a lot about that this decrease in inflation will kind of bring more volume back into the market. However, when we broke down, so this is looking at the pack change, so who's picking up more volume in their grocery trips, and we broke down by our comfortable, managing and struggling shoppers. It's worth noting that it is only the managing households that have actually seen an increase in volume per trip, but just ever so slightly at that 1%. So this recent increase in volume that we saw on the chart a couple of slides back, it's actually only coming from those that are managing, where our comfortable shoppers and our shoppers that are struggling are still picking up less volume per trip. So I suppose overall, what we're seeing with the market dynamics is there's definitely a renewed opportunity to deliver volume growth and premiumisation as inflation levels stable. But I think it's really worth noting that this doesn't mean forgetting about value, with only 15% of the population have actually expected to see their finances improve in the next year. And then if we just focus in on our shoppers and kind of how they're reacting to these changes in the market. So we have broken down 3 shopper choices that are making a difference to the landscape. So we focus on, as I kind of touched on there, the trips, are shoppers trading up or down, and then what has the impact of promotions been? So to kick off with trips. So here I have just trended out the last 4 years of packs per trip in the green and then frequency in the blue. So frequency is how often shoppers are in store. And you can see there across the kind of end of 2021 into 2023, it was a lot closer. However, from 2023, you can see really that that frequency has increased quite massively. So Irish shopper baskets are remaining relatively low, but frequency continues to grow. And it's a theme that we have seen over the last 2 to 3 years, that shoppers are shopping little, but they're shopping a lot more often than what we've ever seen before. And when we look at what household is contributing to this, so here we're just looking at the year-on-year packs change, and this is broken out by the members per households. And you can see there that that 4-member household is seeing growth in terms of volume. However, nearly 70% of packs were purchased by households between 1 and 3 members. So this trend of the little and often definitely isn't going anywhere anytime soon, with those 4-member households being the only group to increase their volume year on year. And then if we look at our trading up and trading down, and we're just going to focus on brands and private label in this section. So if we just focus on the chart on the left-hand side there. Sorry, it's a little bit light there, but basically overall what we're seeing is over the last 3 years, private label, I can't really see, but the grey line up the top is private label. But over the last 3 years, private label outperformed brands, but now we're seeing brands accelerate, widening the gap of private label. So a really strong position, and you can kind of see there on the bottom right of the chart is when brands have begun to overtake private label. And the chart on the right-hand side there, that's looking at brand and private label shares. So not only are brands seeing a stronger value growth than private label, they've actually regained share. And if we look at just the different tierings between our brands and private labels, so you can see there brands holding over 51% of value share in the market. And then we have our private label there at 39%. What is worth noting here is our premium. So although it's quite a small share, it is actually its record share that it's ever had in the Irish market at 4.2%. And if we look at how these different tiers are growing year on year, so you can see strong growth across all. However, it is really significant growth for premium private label there at 12.7%, but then also a really strong position for brands growing just below 6%. And then I wanted to look at within the retailers who is kind of driving that growth for branded and private label. So here in the gold is the brand's contribution to growth, and then again in that grey is private label. So you can see overall in the market there's been an additional 97 million euros spent on brands, and you can see all retailers have seen really strong growth in terms of both branded and private label, whereas Aldi is the only retailer to see brands decline slightly. However, when you look at that chart there, it is actually Tesco and Dunnes that are seeing that strongest boost in overall branded growth. And then lastly, just taking a little look at promotions. So I suppose during the pandemic and during the cost of living crisis, we did see retailers definitely increase levels of promotions to try and help consumers mitigate these rising costs. So if we just look at the percentage of packs sold on deal, so at present, roughly 20% of packs are sold on promotion, and this is up ever so slightly from last year where it stood at 19.4%. But if we actually look at the value sold on deal, so this year it's just over 21%, so 21.9%, versus last year at 21.7%. So it's clear that promotions are definitely more important in terms of presence, but the discounts are actually larger than what we may have seen previously. And here we have just trended, so the grey is not on promotion and orange on promotion from Jan 22 to now. So we did see, as I mentioned, a lot of increase from the retailers in terms of promotional activity and definitely boosting through loyalty schemes. But after almost 2 years of an increased promotions, there has been a slight slowdown in the market. You can see that growth rate is kind of stabilising over the last couple of periods. So we do feel unless there is a ramp up in investment, that this continued slowdown of promotions is here kind of to stay in the market. And again, just to briefly recap what shoppers are doing and how they're behaving in the market. So they're out in store a lot more, but they are picking up less trips. And there is that sense of trading up in the market, so whether it's moving into brands or premium PL. And then we do see the state of promotions. So there is definitely more promotions, but that kind of depth of promotions is lessening. So to summarise on what I suppose we need to think of is shoppers are in store more often. And there's definitely more opportunities now for brands to attract shoppers and to engage. From our shoppers, there is more of a willingness to trade up to brands and premium private label. And we know the roles that promotions play, but the depth of the discounts and the reliance are definitely soothing in the last year. Okay, and then just to have a look at our retailers. So just to give a lay of the land, I've just looked at the last 3 years retailers' value share here, and I've just focused in on the big five, so our Tesco, SuperValu, Dunnes, Aldi and Lidl. And we can see that Dunnes has the greatest share now at 24.6% of the market. However, all retailers have seen a slight decline in share versus last year, apart from Tesco that is holding quite strong at 23.9%. So again, just focusing in on the big five, I have just looked at the share of buyers across all. And you can see that almost half of shoppers shopped in each of the top 5 stores over the last year. So again, making that competition for share as tight as ever. So our shoppers are definitely shopping in between 4 stores over the month. And when we think of what shoppers or what retailers are really trying to do, it's to attract shoppers into store. And they've put a lot of time and energy and innovation into loyalty and reward schemes. And I think it's been quite an interesting thing to watch over the last year or two of all the creative ways that they've looked to reward their shoppers. And in terms of the rewards, they really varied. So some were for just shopping with them. Some were for making bigger trips, for being consistent in shopping in the retailer. There was also prizes for baking, and then a recent one for Lidl was for being Irish or even being called Killian. And the list really goes on of all these innovative ways for the retailers to try to get shoppers into store. And if we look at the loyalty across the retailers, so this is just year-on-year loyalty. So through these reward schemes, the retailers have either maintained or grown their loyalty, and it's really squeezing other stores out of repertoires. But I think it is worth noting here when we look at Tesco there in the blue, Dunnes and Lidl, they have actually seen quite a strong increase in loyalty, and I think they are definitely quite dominant and strong with loyalty schemes over the last year, so it's definitely paid off for these retailers. And I suppose when we think about, as a brand, how can we create more presence at shelf and how we can really stay in the mind of our shoppers, at Kantar we've identified 4 key missions to reflect shoppers' needs. So we break it into the main shop, which is quite self-explanatory, your kind of big trolley shop. We look at replenishment, so this is your top-up trip for tonight, so that's either a few items for tonight or like a breakfast occasion, and then our specific journey, so that is a trip to store to pick up an essential item. So if we think of the retailers and who's kind of performing best within these missions and potentially where your brand falls, here I have looked at the share of the missions from the total market perspective and then to build in the rest of the retailers to see who is kind of over-indexing in each mission. So you can see that each retailer definitely has different strengths and opportunities. So Fortnite super value index quite strongly over. With our main shop, probably no surprise, it's Dunnes Stores. You can see holding 36% of that mission, and definitely their vouchering scheme has contributed to that. Replenishment is very strong with Lidl and Aldi, and then our specific journey, Tesco over indexes. And if we think of another element that has definitely changed over the last few years, it's definitely the role online has played within take-home grocery. And we can see if we focus on the chart at the top there, this is just looking at online's share over the last few years. And we can see that online holds 5.7% of total grocery. It is still quite small, but when we looked at that pre-pandemic, that was only at roughly 2%. So there has been quite strong growth over the last few years. The chart on the bottom there, I have just shown how Tesco is performing. So the number one in terms of online there at over 45%, followed by Dunnes at 36%, and then Super Value at 15%. But I think it's quite interesting. You can see in the green where kind of Dunnes entered into online and how quickly it has gained quite a significant amount of share. And just to focus on this for Dunnes, so I have looked at the year-on-year share change of online for Tesco, Super Value and Dunnes. I can see that Dunnes has actually been the only retailer to remain pretty consistent over the past 2 years in terms of online growth. And their growth has been quite strategic. And you can see that in Munster, it grew significantly strong back in 2023, but now Dublin in 2024. So I suppose just to quickly summarise, it's important, there is a clear importance of reward schemes and differentiation from the different retailers, but there really is that push for brands to grow. And e-commerce is still looking to take share and opportunities from the retailers. So I suppose that was a pretty, I think I'm okay, 18 minutes on time, but that was a pretty whistle-stop tour on all things macro. My details are on screen there, and if there are any questions or any follow-ups, please just feel free to send me an email.